is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome. I'm Steve Rhodes, host of the Trader's Edge, and thanks so much for joining me this morning. I absolutely love being here with you. Hope you had a great week and a fantastic weekend. We're off to a marvelous Monday start. And, folks, you know, if you just simply go around the world right now, you've got the DAX is trading off about 84 points. FTSE down about 68 points. The Shanghai down 34. The Hang Seng came back from New Year's, folks. Came back from New Year's and decided it didn't like the height that it was at and was dropped down to 341 points last night. Nikkei gave us really the first signal over in Asia. You know, we'll take a look at that. That Nikkei traded down 48 cents. You got King Dollar at 51 cents right now. Light sweet crude trading down 97, down at 98.58. You got gold down 740 and silver off 58 cents or so. Take a look at the U.S. markets. We're down about 100 points or so in the Dow. ES Mini down about 12. NASDAQ down 20. And we're going to go take a look at the patterns that are out there. I'll be able to absolutely show you why the markets are doing what they're doing. Just normal breathing patterns, really. Normal breathing patterns on the way up, on the way down. And, you know, we look for volume patterns to give us an indication of what type of move, either to the upside or to the downside. You know, wherever there's conviction, that's what we're really looking for. And so, you know, what you want to do is you want to watch us on TigerTV. That's if you're not listening on the radio. If you are, we really appreciate that. And if you're by your computer or you're just simply near your device, maybe listening to us on your device, you can always go over to tfnn.com. Over on the right-hand side, you will see an area, little red dots around it. You can download the most current live stream app, if you will. You can bookmark it on your phone, on your iPad, on your Android device, and you can actually watch. You can actually watch the charts. You'll be able to see what's on my screen right now. You see my favorite place, as usual, you know, which is up over my left-hand shoulder. I always like to be able to start my day from a period of strength, from an area of strength. You should too. You know, it's all about visualization. You know, we talk about that as well. And the reason why I talk about visualization, folks, is because that's really where it all starts. You know, last week we were talking about, when we came back, we were dealing with a new moon on Monday. We were dealing with the Chinese New Year, if you will. Everything was about newness, if you will. You know, today, if you take a look at the lunar phases coming in at about 1:48 p.m., on the dot, if you will. You've got the moon at apogee. That's when the moon is spinning. That's the furthest distance to us, the Earth in the lunar cycle that we're in right now. That's at 1:48 p.m. For those of you that follow lunar trading strategies, you're going to want to mark that down on your sheet of paper. You're going to want to take a look at the ES Mini, the futures contract, and you're going to want to draw a line there. You're going to want to understand whether the ES Mini is trading above or below that line in your trading. That's just a little secret that I'll throw out there for you, a secret of success, if you will. We got all kinds of secrets of success, but they really all start in the mind. They really all start with visualization. Last week we talked about it's part of the new year, if you will, for us. January 30th. In fact, happy birthday, Shay. That's my middle daughter, turns 21 today. That's a beautiful thing. Remember when you turned 21, folks? Oh, man. I hope she is safe out there. I know she'll be safe out there. So it's a great day for me. Nothing like celebrating a birthday. I like doing that every day. Every day is, a new beginning for us. If you take a look at the markets, the way that we trade, the way that you should be looking at charts, it always should be about a new beginning. You should always arrive at the chart and be able to be willing to accept what the charts are telling you, what patterns are out there. You don't want to arrive there with a belief system that you already know what's going to happen, because if you believe it, it will. Well, maybe it will, maybe it won't. What you want to do is you want to interpret what the market, what the participants in the market are telling us. And so we talk about New Year. We talk about in your rearview mirror already. You got January. It's just blown past us. We got one more day left in the month of January. Then we're going to be on to February, folks. We got the Super Bowl. How about that? You got Super Bowl Sunday, a week from today. Some of us will be tired of chicken wings, potato chips, nachos. We won't be tired of the bears, When I say the bears, I'm talking about those Coca-Cola bears, if you will. And right now, today, in the market, looks like the Coca-Cola bears have shown up and they want to play. And we're going to see where the markets can go. You can always give me a call, 877-927-6648. But the theme of this week Last week on Wednesday, I did a webcast, a workshop on how to help businesses be able to achieve what it is that they want to be able to come. We always really talk about charting. We talk about charting technologies. We talk about patterns that are out there. And there's patterns that exist in the marketplace. And one of the things that I want to do, what I learned, is the easiest way to grow, the easiest way to receive is to give. In fact, you need to give unconditionally. If you're not getting what it is that you want in your life, it's because you're not giving enough. I can absolutely prove it. I know that's how it works, folks. And so if you want more, you need to learn how to give more. When you give more, folks, you will receive. And you can't do it conditionally. You need to absolutely do it unconditionally. One of the things that you could give us here, folks, one of the things that you could give us, you could give yourself, if you will, is tell people about the show. Tell people, that today at 11 o'clock you got Basil Chapman. He'd be sitting in the on-deck circle and getting ready to hit him in. You got Larry Pesavento, and from 3 to 4 you're going to have David White, if you will. Tell folks, tell one person about the show, because we want to be able to help people attain financial freedom, or I want to be able to help people attain in their business cycle, if you will. I want to be able to help people obtaining their dream client. That's what last Wednesday's workshop was all about. It was about strategies that I've used forever, and those strategies, folks, are aiming up high. When you're playing the game of life, look at life, folks. In my opinion, life is an invitation. It's an invitation. You take a look at these markets. The markets are always inviting us to play in the money game. A lot of folks are just simply sitting on the sidelines because of fear. Fear, that false evidence appearing real. We can teach you how to make money in this market. Tom does it each and every day. I do it each and every day. Basil does. David does. Larry does. Ken Shreve does. We all do, folks. We want to be able to help you take this money that's sitting on the side or wherever it's sitting. There's nothing like working hard, but you've got to get your money to work hard for you as well. You can't leave it sitting out there. You don't want to use a buy and hold strategy. We're in volatile markets. You want to be able to make money on the way up, on the way down, or at least on the way down. You want to at least get out of the game, if you will. Put your money on the side. Put it in King Dollar, if you will, which is trading up 49 ticks right now. But the theme of this week, the theme of Wednesday, I taught people the same techniques that I've used, the same technique that I used to get Michael Eisner on the phone. You see, when I decided that I wanted Disney to be one of my clients, when I wanted to be able to have a location in Disney, when I talk about having a location, folks, I didn't just have a location. I had the numero uno location, if you will. I had a location inside the Disneyland castle. Do you know how many folks have owned and operated a retail store inside the Disneyland castle? Yeah, you can't count them on one hand. And I'm nothing special, if you will, other than using special techniques in order to be able to get past the gatekeeper. That's what I taught folks on Wednesday. But more than that, and what I'm really going to start doing, to at least those folks that attended or all my clients, if you will, that are out there, is I'm teaching really the next step, you see, which is, how is it that you start and you create a conversation, if you will, with your dream client? Because it's one thing to be able to get past the gatekeeper, and you've got to learn how to do that first. And those are some of the techniques that I put out there. But, folks, what it's really all about, what it is really all about, it's really what is your stand. What is it that's holding you back? That's all that this is, because life's an invitation. Each day, you're being invited to be able to do something in life. Here, if you're with us at TFNN, you're being invited to play the money game. You are being invited to learn how to make money. We can teach you the strategies. I teach you those strategies. Most people are amazed that by using the strategy that I've taught, which is only using 1% of your working capital, not 1% of your working capital, but only risking 1% of your working capital, that you actually could obtain results. Right now, if we just did nothing, and this is just in the past 7 months, since I started the newsletter, if you will, right now, if we just closed everything out, we've produced more than a 40% return on your money. That's excluding your transaction fees, so it's going to be a little bit different depending on what your balance was. But if you had $100,000, which is the average that most folks have, at least in their 401k accounts, if you will, over 40%. We're on over 75% click. Most people don't believe that it can be done. They think that there's something wrong with it. Well, folks, if that's your belief system, that's true. But if that's it's only because that's your standard. If you want to be able to attain a ton in your life, what you've got to do is you've got to set a standard. See, I teach folks to go after their dream clients. Their dream clients are the ones that can change their life. When it comes to the money game, I want to teach you how to be able to attain your financial freedom dream. I want you to be up here. But you see, for some folks, you see, what you have in your life is really the standard that you've set. So we're going to talk this week about what is it that's constraining you. What are your constraints in life? What you're going to find, and I ask you this question here. What is it that you think is the potential of the human mind? And I know most folks out there could answer that, and they could say it's absolutely unlimited. That's right, it is unlimited. Well, folks, that's your mind. Your potential is unlimited, but it's limited by a couple of things. It's limited by constraints, and the question is, what is your constraint? Better yet, who is your constraint? And so I'll leave you with this thought as we go into break, folks, because what I like to be able to teach people to do is I like to teach people how to do the impossible. But what are those first two letters in impossible? What are your constraints? Who's your constraint, folks? That's right. I am. Not me, but you. It's the I am in impossible that's the constraint, folks. So I'm going to teach you how to blast past that. We'll be right back, folks. We'll go take a look at the markets. 877-927-6648.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You are born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. You've got the futures are off. Let's see what the Dow futures are down right now. Looks like Dow futures off about 94 points. S&P, that's where we're at right now. We're in the ES mini contract. They're down 11. And what you can see, if you're following us on Tiger TV, over in the bottom left-hand side, I went ahead and shaded it that lavender or purple color, if you will. And what you're seeing there is you're seeing a three-drive pattern. You know, if you've been listening to the show, you know that formed at 7 a.m. on the, what was the date here, January 24th, if you will. And it was wonderful because it formed that three-drive pattern, and then it was confirmed, it was followed up. What you're looking for is some other type of candle signal, or that's what you'd like to be able to see. And what you had here is you had a three-drive to a bottom pattern. You had this bullish engulfing candle. That came in at 7:30, if you will, so 7 to 7:30 on the 24th. You had a confirmation, a beautiful confirmation, if you will. And if we go ahead and we zoom back in on the ES Mini, you will see that the ES Mini, it even came down and tried to test that area. Now, it did that here, you know, during the same day on the 24th. It did it at 9:30. It did it at 10 o'clock, if you will. Finally rejected it, if you will, at the 10 to 10:30 area. Rejected it, moved on up, came on down in here, tested really that bullish engulfing candle. I love to be able to look at candles that are out there. They give you so much information. So much information. It's so cool. You can see how I'm just going to go ahead and zoom out here, if you will, so we take a look at the ES Mini. And you can see how it traded all the way up into the 10 o'clock time frame on January 26th. If we just simply take a look at, let's just come and take a look and see what kind of expansion it was right here from 10:30 on January 23rd all the way down to the low right here when the bullish golfing and that three-drive to a pattern candle was tested. That would be the low on January 24th, where the ES Mini got down to 1301.50. So if you just simply go from that high swing point, a swing point is nothing more than when you see a change, a reversal in trend and change, and you can see in this case here it was a peak. You know, it wasn't one of Basil's peaks, if you will, but it certainly was a peak where you saw a change in trend, came all the way down. Might have been one of Basil's peaks, for all I know. And but you have to tune in at 11 o'clock to find out. And so what does the ES Mini do? It moves all the way down here. If we just simply take a look at the expansion, we look at a Fibonacci contraction and expansion. We love to be able to take a look at expansions that are 1.272 and 1.618, folks. And what you're doing is you're simply taking the measurement of that area, and then you're multiplying it times 1.272, adding that to the bottom. That's going to give you a price projection. Well, look what the ES Mini does. The price projection of 1.272 is 1322.80 or so. What does the ES Mini do? Well, going into 6 o'clock on January 21st, gets up to a high of 1324.75. You got to love that. Within like about a point and a half, right? Does that, does something different, moves back on down, but look at the final price projection, the final high, the price projection, the 1.618 expansion. You want to be able to remember those expansion numbers, folks. 1.618 of that same set of swing points when you made that three-drive pattern, 1329. We're going to go ahead and round that off. And what does the ES Mini actually get up to? 1329.75. You got to love this stuff. I want you to be able to learn this, teach this to you, because it's so helpful. Because how do you know where you're going to, folks, unless you know where you're coming from? Now, what does the ES Mini do? Well, you can see we came down here, and it has busted that three-drive area. It has busted that bullish engulfing that was down at the bottom. That's that red line that's going across the bottom of my screen here. And what happened, folks, is you can see we were testing it. We were testing it at 8 o'clock this morning. You actually tested it, you did that at 4:30 in the morning. Couldn't bust it. You tried testing it again at 5. Couldn't bust it down. You tried again from 5:30. So all during this, we're looking at a 30-minute chart here. Continued to try to bust that area, but that area held. Well, what happened at 8:30? It gave way. You know, it was like you were just simply chiseling away at that, and finally the ice broke, as if you were ice fishing out there. Well, now, folks, what used to be support is now resistance. And so that resistance, if you will, really the resistance, if you're going to take a look at the ES Mini, it's going to be the top of that bullish engulfing candle. So you're going to take a look at the top to the bottom. The top of that candle, folks, is 1306. The bottom of that candle, 1302.50. You're trading out at 1301 now. And so what's it all about? Why is it giving way, and where is it going to go? Well, let's go ahead and just simply remove those expansions right now. Let's first take a look at possible retracements in here. And in fact, let's go over and take a look at the daily chart. So let's switch over to the daily chart. Let's zoom right out. And if we're going to take a look at the futures contracts first, of course, you got to say, Steve, pull them up if we're going to go look at it. So let me try to pull it up. I clicked on the wrong tab here. We're going to go take a look at the ES Mini. Here's where we're at right now. And you can see this is the ES Mini, folks. So made a beautiful pattern, one of those butterfly patterns, one of those 1.272 butterfly patterns. We come back, we'll take a look at the ES Mini, see where that could trade down to, or you can give me a call, 877-927-6648. We'll be right back, folks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley of Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow down 99 points. S&P's off 13. Composite at down 26 right now. Small caps off 7. Trading out at 791. NDX down 22 points. New York Stock Exchange down 92. DAX right now is down 87 points. FTSE down 73. King Dollar on the move, up 49 ticks right now. And, and if you take a look at just simply the Dow 30, you've only got one stock that's up. You got Verizon. It's up about a nickel, if you will, about 4 cents right now. Otherwise, you've got the other 29 Dow stocks are negative. And let's see, if you go over to the financials here, let me see. In the financials, we got anything positive? Not at least in the top 20 or so financial stocks. So we've got what I've got up on my screen, and folks, hopefully you're following along on Tiger TV, because what we absolutely want to be able to do is teach you, and when we can teach you both through audio, through video, that is the way to do it. And again, please share this with, if you want to be able to grow, you've got to give. And one of the things you can do is you can give somebody a gift in your life. You can give them the gift of tuning in to TFNN, because one of us here, if not all of us, are going to be able to teach you, going to be able to teach your friends, your family, how to be able to truly get ahead by simply raising your standard. That's what my focus, if you will, the theme of this week is really going to all be about standards. And when you come out of this, folks, you are going to be living at that outstanding standard at everything it is that you want. Why? Because there's extraordinary rewards. But what you're going to find is you've got to take massive action. Because here's the deal. If you take little action in life, folks, what kind of results do you think you're going to get? You think you're going to get little? You're going to get less than little, folks. So always take massive action. But let's go take a look at the action in the ES Mini, if you will. Let's go take a look at where this could trade to. We've got this beautiful butterfly pattern that's out there. Now, what you want to do with your retracement tool is you want to go from your A to your D point. You see, a butterfly is nothing more than an ABC. In this case here, our A point goes back to November 25th when we came back from Thanksgiving. Although some of us, we didn't really come back to the market, but boy, it gave a great trading opportunity, because it was really a 0.786 retracement off of that October 4th low, and that's what I just put up on my screen here right now. I went from the low of October 4th all the way up to the high on October 27th, and you can see this line right here is about 1152. That's the 0.618 retracement. And when it comes to retracement levels, you're going to want to understand 0.618, 0.786, 0.382. Those are the only three that you really have to know, that you want to make sure you've got on your radar screen. Well, when you're taking a look at a butterfly pattern, what you're looking at is you're looking at those retracement areas. So you're going from your A point, which was on the 25th, all the way up to the D point. That's where this butterfly pattern completed. We call it a butterfly, an extension, because it's an extension of where X marks the spot. In this case here, it was October 27th. That was our X spot, if you will. The high there in the ES Mini was out at 1289.25. Now, so what you're looking at on the screen, let me go ahead and use the tool that'll make this a little bit darker. There you go, a little bit darker. Let's go ahead and blow this up a bit. So it's a little bit easier to see. So the first level that the ES Mini, the first level of support that you should be taking a look at is 1280. That is nothing more than the 0.382 retracement of this entire move. Now, one of the things that I always like to do is also see, are there retracement levels coming together in the same general area? And what I mean by that is, let's take a look at the C to D leg. I haven't done this. Let's just go take a look at the C to D leg out here. And the C point, folks, is December the 19th. So we're going to take that same retracement ruler, if you will, go all the way up to the high that was made 3 trading sessions ago. And what we're going to see, so if we're looking for a range, let me just change the color there. So if we're taking a look at a range, this happens to show that quite frankly, at that point, 382 level is the 0.5. Now, I just have that out there. But what you're really looking at as the range on this pullback that you would expect to first find your first level of support on the ES Mini, and there's nothing wrong with the market pulling back to this level. See, this is nothing more than normal breathing patterns. That's why we want to be able to teach. That's why we can teach you how to attain, financial freedom, folks. It's not just sitting on the sidelines. It's not just praying. It's not just believing that financial freedom is going to show up. It's about learning how to trade the patterns that exist in this marketplace because, you take a look at what the S&P is trading at right now. It's the same price in essence that it was trading at back in the end of 2010. If you will, the beginning of 2011, give or take a few points. Well, so for the market to just simply pull back, it looks like the range here is 1246 to 1280. Well, that's quite a ways down. Right now, you've got the ES Mini trading out at 1299. So at 1300. That's going to feel like a pretty decent pullback in the markets, and it will be a pretty decent pullback. So that's the ES Mini. If we're taking a look at that, if we go look at the other futures contract out there, well, let's go take a look around the world. Let's go start over in Asia, because you remember in Asia, I was telling you that it was really the Nikkei, and if you went back and you listened to the archive show, and folks, you can catch the archive of this show on Channel 14. Now, what I've got, you're going to see a bunch of different lines, if you will. The red lines are retracement lines. So I've adjusted this tool here so that when you take a look at it, the blue lines are expansions between swing points. The red lines are retracements between swing points. Excuse me. If we take a look at here, we start with the Nikkei. We go back to the swing point back from July 26, 2011, where the Nikkei moved up to, when it moved up on 4 trading sessions ago, that was on January 25th. What it did was it made a 0.382 retracement from this swing point here all the way down to the low that was made in the Nikkei. And guess when that low was, folks? November 25th. You don't think that these markets are at least in unison with regard to direction? May not be in price, may not be where it's retraced back to, but certainly what we have here is, you see, in the world, folks, there's a dance that's going on, and everybody's been invited to the dance, into that party. And when you take a look at the party here in the Nikkei, folks, you can also see that it was making a 0.786 off of this swing point high, which was October 31st. That was from the October 31st high all the way down to the November 25th low. So you had a 0.786 retracement coming together right here. What else did we have? If you came down to the next swing point, you had a 1.272 expansion. What did we also have? We had a 2.414, 1.414. Those, if you will, those are like mini tremors, if you will. Those are also Fibonacci summation numbers. You want to be paying attention to them. When they show up like this, and you've got really the primary numbers from a Fibonacci sequence, folks, it was telling you what the Nikkei was doing, what Asia was telling us was that it was up against some pretty stiff resistance. And certainly, when you take a look at the Nikkei, it's traded down. Where would the Nikkei trade down to? Well, you just simply, in this case here, let's just go from the swing point of this last move, which was January 16th, all the way up to the high there. The Nikkei is at least going to trade down into this 8,700, 8,697 area. That was the Nikkei. Well, now let's go take a look at further. Let's go look at the Year of the Dragon. Let's go take a look at what did the Shanghai say when it came back from its New Year's celebration. Here's the Shanghai on my screen here right now, folks. And what you can see, these two candles, they're really for the same day. This is from the close of January the 20th. And what you did yesterday, what you did last night, not only did you trade down 341 points. Now, 341 points, that's not such a bad deal on an index that closed out at 20,160. But, folks, what you did here What you did was you created a bullish engulfing candle. That says caution. Caution, Will Robinson, if you will, from All in Space. So what else do we have going on out here? Let's go take a look at the Hang Seng, see what was going on over in Hong Kong. And in Hong Kong, what were you doing? You made a about 67% retracement off of the high from August the 2nd. You know, we talk about 618 and 786, folks, and we're not looking to be exact. You don't need to be exact. You don't need to, in order to have extraordinary results, folks, all you have to be is outstanding. But you've got to set that as your standard. I'm going to teach you how to set those standards for you in life and trading. You know, that's what each of us contributors, that's what we really do here. We're all about trying to help you get outstanding results. We know that you can do it. Why? Because just how powerful is the human mind? What kind of potential does that human mind offer? Unlimited potential. That's if you want. So you can see here, if we take a look at the candle pattern here on the Hang Seng, let's go take a look at where it closed Friday's session. Friday, you had the Hang Seng close at 20,590. 20,590. No, close. Steve, wash your glasses, would you? 20,501.67, and when it opened yesterday, it opened at 20,518. So that gave us a bearish engulfing candle right there as well. And so, you know, you've got some real caution being sent out to us. It's a loud signal. So now what's it all about? Well, we know it's all about King Dollar. How do we know that? Because when we take a look at the directional movement of what's going on in the marketplace, all we have to really do is see if that correlation is still in place, and you can see that it is. We're just looking at the correlation between the U.S. dollar index. That happens to be the blue line that we've got here. The red line happens to be the ES mini, and this is an inverted chart. When we take a look at the U.S. dollar, when the U.S. dollar gets stronger, that means the blue line is going down. So when the U.S. dollar index is going down, that means in this case here, the market would be going up, because it would be inverted, right? So we've got a stronger dollar here. That's with this downtrend. And what do you see? We see the exact same thing. You see it lockstep. And so this is our directional movement. Now, when we take a look at the real depth and breadth of the marketplace, what we got to do is we got to switch over to our volume. We got to switch over to the ETFs, if you will. That's one of the easiest ways because all of you've got access. Most of you have access to that. And then we take a look at the volume, see if there's any volume coming out of this market. You know, or is this just simply just you got an invitation to the dance, if you will, and there's still no decision on just how deep this market wants to go or just how high this market wants to go. But you want to understand the correlations that are out there. Well, how does this correlation happen, folks? It happens because of the currency market, because the U.S. dollar index is a basket, if you will, of 6 currencies. The euro, U.S. dollar being the gigantic piece of it, like 60+%, if you will. And if we go take a look at, that's what we've got up on the screen here right now. We've got the euro, U.S. dollar. And what you can see here is, we talk about that 0.382 retracement, right? Well, go take a look at right here. You got this swing point, which is October 27th. Go figure. Of course, we've got unison in the market, so when you take a look at the euro here, and we take a look at the swing point that we're going to take our measurements from, so if we go from the high of October 27th in the euro there, that was 142.455, all the way to the low that the euro traded down to, that was on January 13th, got down to 1.26229. You take that measurement, folks. Take that measurement, and where the euro traded up to in Friday's session, when it even opened up last night, it was right at that point, 382. That's what this red line here, that's what this number is showing. We take a look at expansions, if you will. You've got the euro making an expansion off of this swing point from December 27th. 1.272 is one of our fib numbers. It made like about a 1.33. That, folks, to me, that's outstanding. That was giving us a signal here. You got a 0.707. Real close to 0.786, if you will. So you can see that the euro was coming up against some resistance. Now, here's what's really key, folks. What's really key is where the euro finishes trading today, because what you can see that you've got here is right now, if the euro closed right now, you've got a bearish engulfing candle on the euro. And that would say that the euro wants to trade further south. Well, From a directional standpoint, we know that if you've got a weaker euro, what you're going to also see is you're going to see King dollar getting stronger. You're going to see our markets moving down. The real question is going to be the breadth of it. What kind of volume, what kind of conviction is behind the move? If you're a bull, what you'd like to see is you'd like to see a normal breathing pattern on the way down, move down with light volume. Why? Because then you'd go ahead and pull your trigger. And you see, what I want to be able to teach you folks is you can both be a bull and a bear. I want you to be able to just simply understand chart patterns and how to take advantage of it, how to use the right money management strategy so that you can start moving towards financial freedom. That's our goal here. That is our mission. And I want you to be able to, you got to have strong reasons why. And if you don't want to do it for yourself, maybe do it for your children. Just imagine, I hear how difficult it is out there, to get a job. And in this day and age, I was talking to a good friend of mine yesterday afternoon, and we're just talking about how many kids that actually are graduating from college. I don't know what the total number is. Look, just in the state of Florida, what I know is just between 4 schools, Florida State, University of Florida, UCF, USF, Miami, there's got to be at least 50,000 kids a year that are graduating. You take that out times 50 states, if you will, and it's more than that number of kids that are graduating coming into the working environment. Those folks aren't even factored in to the unemployment rate because they haven't gotten a job yet. Well, wouldn't you like to, what better age to be able to teach your children the tools, the money management game? They're probably great at games. They probably could kick your butt at any games. I know mine could, if you will. And so you want to be able to teach your kids these types of tools, because what better gift could you give your children than teaching them how they can manifest, how they can amass a fortunate life so that they can always do what it is they want to do. When we take a look at the euro out here, what you're looking for is, if you're a bull, you don't want to see the euro close below 1.31072. That was the open of Friday's trading session. You get a close of the euro below that, folks, and what you've got is you've got a confirmed bearish engulf, and that says that what the euro is likely going to get down to is this 0.618 area, 1.29. What else would you be doing down there? You'd be testing the swing point from January 13th, folks. It's a beautiful thing. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. You get the Dow trading down 108 right now out at 12,551. S&P's off 13. And in the Dow 30 stocks, you got 3 stocks that have turned green. Apple up 19 cents right now. Verizon up 8 pennies. And nope, you've only got 2. Whoever was green before it just went dark. Now, when we went to break, we were taking a look at the euro-US dollar currency pair. We were talking about the bearish engulfing pattern. Why is it important? First of all, why is it important for you to understand that candle? Why is it important for you to understand what's going on with the currencies? Number one, I don't want you to be afraid of currency charts or currency trading because, any chart, you don't have to, you can wipe off the name, if you will. These chart patterns exist out there. They work. I want to be able to just simply teach you these chart patterns because they're your roadmap to success. They are your triptych if you are going on a trip, and these bearish engulfing patterns or bullish engulfing patterns or other things that we show you, folks, are nothing more than the detours. That's all. It's just a detour. You're still going to get onto your road to financial freedom. That's if you're willing to accept that markets breathe and they go up and down, and that you can make money trading the markets both way, or you can at least step off to the side and let that little storm, what I'll call that winter season, get past you and just wait for spring to come along and then get back in the game. Well, I've got the U.S. dollar, Japanese yen trading out right now at 76.35. And what the Japanese yen has done is really busted through a just kind of a normal, if you will, a normal support area. It's trading below that. That's where I've got my thin red line of my crosshair, if you will. So you can see we're trading down below that. The 0.786 retracement now, folks, this is just coming off of 1 day of trading. This is where you had some intervention by the Japanese finance minister. That's going back to October 31st, if you will. Happy, I guess that was trick or treat. And what the Japanese finance ministers want to do, they wanted to give you all kinds of treats. Look at this movement that you had here in the Japanese yen. They just simply need the yen to get stronger. A weak yen costs you money, costs me money. Of course, a weak yen means King Dollar's got to get stronger. And King Dollar and Japanese yen, I think it's number 2 or 3 with regard to a weighting inside the U.S. dollar index. So you've got this 0.786 area. You can see we're trading really right at that range right now. Do I recommend taking this as a trade? Absolutely not. I don't. Why? Because what the and you can see here at the highs. This is where I wanted to go with this. Look at the highs. You had this bearish engulfing pattern that occurred on November 2nd. What happens to the Japanese yen, U.S. dollar currency pair? Trades down. Moves on all the way back up. What do you have here? You've got another bearish engulfing candle. That shows up on December the 23rd. Moves back down. What does it do? Makes a 100% move of a move. When it comes back up, what's it do? Comes right up against this bearish engulfing candle. Okay, that acted as resistance. You had a move of a move. You had everything you needed. Now you're moving back down. But when you're moving back down, you're busting through this area. This area here still might hold. But right now it's busted through it. In the trade, folks, let me give you a currency trade. Now, some of you folks might trade the ETFs. It's not exactly what I recommend to trade the ETFs, because the ETFs you're just trading between basically 9:30 and 4. Maybe sometimes you're trading them, in the pre-market or the post-market, if you will. You really want to learn how to trade currency pairs so that you can be in there, so that you can have your stop. You see, your stop is your risk. And that's the only thing that you can control in trading, and we want to be able to, the money game is making sure that you can control what it is that you can control, setting up the trade. Well, I would suggest you could go ahead and play the ETF here when the U.S. dollar Japanese yen gets all the way down to this bottom area here, 75 range. Why? Because twice before we have had the Japanese finance ministers step in, and they'll step in again, folks. Anyways, it's great to be here with you. Don't like to say anyways, but it's been great to be here with you. Stay tuned. Got the Money Masters show coming up. Take care, folks.